Morning guys. So as the title of the video suggests, what I wanted to do is just do a quick overview of today's opportunity and also run you through why I missed it. I had to just catch up with Michael's tweets from today, and he actually drew our attention to the 5-minute time frame and observing the shifting market structure there. And if I'm honest, I don't actually recall that being part of the initial teaching, because it was a shift in market structure on the 15-minute time frame. So that's what caught me out. So I'm going to have to go over my notes and then also go back and have a review of the videos as well. But so today's price action is still underway. So here, so after this down day yesterday, I think most people were going to see this as a continuation, which just seemed a little bit suspicious of. It just seemed a little bit too obvious. However, the draw on liquidity was going to be the low here and the opportunity above the opening price in order to get your Judas swing and then to come back down, which was actually narrated by ICT himself as it was happening. So going from the daily time frame down to the 1 hour time frame, you can see where we've just been skirting around this here. So we've actually come to take the lows here 2 o'clock Eastern Standard Time. So we've already taken the sell side liquidity here. And then if we go down to the nitty gritty bit, so here we go. So we've actually got these relative equal lows here, excuse me. And then just as we were opening into the New York Open at 8:30, when we had the news a little bit later, we'd started to make a run up. So what that's done is anybody that would have been rolling their stops to here or here for this would have created the like some more buy side liquidity. So we've engineered the move up into that region, which also coincides with a 1 hour PD array, easy for me to say. So there's your short-term high, but when we actually come back here, we've got this range here, which was fair value gap, and we've actually come back to mitigate 50% of that. So go back down to the 15-minute time frame. We've got this Judas swing here, which actually taken the buy side liquidity here, and it's actually traded into this higher time frame PD array, which is the 1 hour fair value gap. And then we've actually created this downwards move here, and then Michael was alluding to the 3800 level, which we've hit pretty much bang on. So you've got your round number, you've got about 10 to 12 pips below the low of there. But if you think about it, so if this looks like a breakout to the upside, what we've done is we've actually engineered liquidity below this. So as we've actually created a retail higher high here, and we've actually got this momentum coming in to the upside, this then looks like a retracement. So naturally, this is looking like a retail opportunity to go long. And what they've done is they've actually induced the sell side liquidity here. So all the smart money's done is it's just simply paired up the buy side liquidity from here, and it's just paired it down here with the sell side liquidity. However, Michael has actually taken an opportunity, a trade here, and I missed it. So if you go down to the 5-minute time frame, and what we'll do, just remove all that for clarity, and then have that drawn in, and you've got these relative equal lows here. So this was the framework for the trade, and there's only a shift in the market structure here, which is observed on the 5-minute time frame. I have asked the question, does this also count as well as a swing low? So I didn't actually see a swing low form here, so there's no 1, 2, 3 swing candles anywhere within this move, and I just stayed out for that reason. But the trade that presented itself was this here. So that was the drawn liquidity. That was the actual entry there. So as per the criteria, entry, stop, and take profit. So that would have been easily 3.5%. If we go all the way down to very low, let's just say 4.5% to be a little bit conservative. Almost 4.51. That would do us. So we've gone from this liquidity down to this liquidity, then we've come back up, and then we've spiked out this here. So you can see that we're in a choppy day, which is fine, because from what I can gather, if we have a shift in market structure on the 15-minute time frame, then that is an indication that we can actually hold for longer targets. And then on a 15-minute time frame, what we're taught is we can then look at carrying that trade for the rest of the session or the rest of the day, and that will actually give us daily range expansion. However, in a market like this is merely a scalp. It's just in and then out again. Take the money and run, and don't concern yourself really with any longer term objectives, especially when you look at how history repeats itself. You've got a long range day, indecision, long range day, indecision. So this, to be honest, is in a bit of no man's land now. But I just thought I'd keep it nice and short, just to show you the framework for the trade that I missed today, and then also just a bit of clarity really on why I think it's okay to be going down to the lower time frames, providing that you are taking profits within the context of the smaller time frame objective. Anyway, I hope it was useful, and until next time, I'll speak to you soon. Thank you.